Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today, I'm going to give a quick market update and show a Bitcoin swing trading strategy, which can also be used to see if we're in a bull or a bear trend. So let's get straight into it. Okay, so first things first, let's have a look at the old macro chart. This one here is the weekly Bitcoin logarithmic regression chart, and basically shows that we are in the bottom of this band at the moment, the log regression band. As you can see, there's the bottom touch there, and we've shown this chart in previous videos, but basically it's been curve fit to the low of the pandemic crash there. I've just got a bar pattern over the top to have a look to see what 2018's recovery looked like, just to see what it would look like if we are currently in the accumulation phase compared to 2018. So that's just basically showing what happened back then, but history does not repeat itself necessarily. It doesn't always repeat itself, but it often rhymes sort of deal. So that's just there to sort of give some sort of indication as to how long it took last time. That is, if we don't just get another leg down and then accumulate sideways, or range sideways, I'd say, and then get back into the band essentially. So this is taking into consideration the fact that we might be bottomed already. And if we have bottomed, then this was what happened last time. And as you can see, there's only 2 more weeks basically. So next week and the week after, until if we were to do exactly what happened in 2018, would be exactly what this would look like, this kind of recovery here. So that's kind of the bullish case, and there'd be quite a fight to get back above the 21 and 20 EMA and SMAs basically, which is the bull market support band or bear market resistance band, as Benjamin Cohen calls it. So these are significant moving averages. You can see they are often respected very well, in fact. So here it was acted as support, here it basically broke below it, and once it broke back above, held as support, and then it could not hold here, which was a sign that we were entering another bearish trend basically. And as you can see here, we had a small little fake out basically to the upside, and then came back below it, and then it acted as resistance, and that was the sign that there was more bearish moves to come. So we are getting closer to it. We haven't quite touched it yet since this point here back in March, but we're definitely getting closer to it, no doubt about it. So that's just the log regression chart. This is basically just showing that down here in the green is a good time to accumulate. We're in there now, so it's a good time to accumulate basically. But it's not necessarily like this is the bottom, because we could still come down and capture liquidity down here. We could still come and visit this region down from 13.7 down to 10.2. It's just a region basically could come to, but for those who feel like the bottom is already in and there's not much that could pull us down that far, then basically this is what we're working with now. And then those who feel like we could go much further, then that's where we have this trend line here, which is the kind of the trend line that sort of starts here, and it's the move down, then the breakout, then the retest, then the higher high. So that's that, and then basically it's come down and it's retest here essentially. So that's what this line here is. So if this line still is respected, then basically what we could be looking at is the move back down to retest it before recovering. And that falls right into this liquidity zone, basically, which is the high here in 2019, and this support, this hold of support of the bull market support band after the pandemic crash. So that's kind of this region here, and that would be the retest of this specific line, which has acted several times as resistance here and support here. And that's your classic breakout retest. This is a very long retest, so yeah, make of that what you will. Next up, I'm going to show my 2-day Bitcoin chart. So this uses the TMA overlay. This is the swing trading strategy basically. So I'll quickly cover this. This is the chart that I was talking about before that basically shows it's a Parabolic SAR on the 2-day. So the way this strategy works is once you get the candle flip, and I'll put the settings to the strategy down in the video description below. But if you go back a couple of videos of mine for the ETH Daily Swing Trading Strategy, it's exactly the same settings, but on this chart, it's 2 days for Bitcoin instead of 1 day. So yes, as you can see, basically the way the strategy works is upon the candle change color. And just to quickly show, it's the PSAR buy and sell alerts by Guikroth. Again, covered this in a couple of videos ago. So if you want more details about this, please watch that video. I will leave a link to that video in the description below as well, so you can watch this in more detail. This is just expanding upon that strategy. So basically what we're doing is we're waiting for the candles to change color, and then we're waiting for a retest of the closest moving average, especially the 21 and especially the 50. And we're talking about the smooth moving averages. And again, the TMA overlay is what we're using for that because it combines a bunch of indicators. One is good because we can add more indicators to our chart. If you've got the free Tradingview or even the paid for one that has a limit of 5, basically it's just nice to kind of bundle things into one. And also the TMA overlay has that cloud that shows you what kind of trend we're in, if we're either a bull trend or a bear trend, depending on if we're above or below the red line, which is 200 period SMMA. And you'll see in a sec that has shown us pretty well if we're in a bull or bear trend. So yes, basically, as you can see this with the strategy, you wait for the flip and then you wait for the retest, and then you can go short on this essentially, and then basically taking profit along the way. So for example, if you went short here and you put your stop loss up here, then yes, it did go pretty close. You might have been sweating for a bit, but you had this bearish engulfing candle here, which maybe you enter a little more. Not really sure. It's up to you. Personally, with this kind of strategy, I like to just go all in and then scale out when I am in profit. But this is up to you on what you wish to do. But let's just say you did get in short here, which is basically pretty much because the way these work is you get in on the candle close. So after 2 days, or after this candle closes here, you get in on the strategy usually, but I like to get in on the retest of the moving average. And this is the 21, the white one. 50 is the blue, purple is 100 and 200, as you can see. Green cloud, bull market, red cloud, bear market. Pretty easy, right? So basically taking profit along the way. So in this case, you took short here. You can actually take some profit at the bull market support band too. But basically I'd just be aiming for these moving averages, right? So, and also any 3-line strikes to the opposite direction. So there's one there. So say if you did take this trade, you would basically be looking at the first profit point being at 18.3%. Pretty nice. Then the next one at 38.26%. I personally would also take profit at a TDSS 9, which is the Tom DeMark TDSS indicator. Just type in TDSS into indicators and you can see that there. But again, that was explained in that video that I was talking about before. And then again at the 38.9 or almost 39% point. And then basically max that you would take off the table is like about 80%, I would say, and leaving 20% ride, just in case we get that retest of the 200 period. Because in that case, if it did go down there, which it did not, but if it did, you know, you'd be looking at a 54% move. So very, very impressive. And you can see here, it did go to the 200. So, you know, if you aggressively took profit all along here, even at this 3-line strike here, then you know, you would have nothing left for the flip for this moving average here. So yeah, I mean, that's kind of how it works, just kind of scaling out, because again, you're looking at, in this case, 10%, 22%, 40% respectively. And, you know, I mean, there was the 3-line strike there, 17%, another 3-line strike there. Again, you're waiting for the candle to close, 24%, and then it flipped up here. And then we retested here. However, now this is something that I noticed with regards to the strategy, is that in this case, we actually did not get a retest. It came close, but it didn't quite get there. Now, one thing to take note of is you want to study the price action that happened prior to the flip. So for example, if you had a breakdown of the 21 and a retest here, but you only flip here, then my recommendation is that you just get in kind of as soon as possible, because a breakout of a 21, a failure to hold, a retest and rejection, especially with this 3-line strike right here. I mean, look at that. Bearish 3-line strike right there. Then basically what you're looking at is very strong bearish price action potential. And as you can see, it wasn't good. It wasn't good. So basically, if that happens, right, that rejection, and that was a rejection off the 21, that was a rejection off the 100, that was a rejection off the bull market support band. Like, that's just insane amount of rejections, and a 3-line strike off of that. Then you need to be a bit more wary that this is probably going to result in a very bearish move, and maybe you get in before this flips down. It flipped here on this candle close. That was in April. Or you wait for something, some sort of signal, maybe the bearish engulfing candle or something like this. But if you're just sitting there moving your short, or it's a short to flip, because if you got in here on this moving average and you're waiting for something to flip your position, well, that's 8% so far. It's not a great loss really, but after this you don't really care much about 8% after you've just got all that. So but if you did get in here on the retest, then and the failure, anytime you see a failure of the 21 to hold a support, it's a very bad sign. Very, very bad sign. So yeah, we had, for example, here, if you were in this long, again, failure to hold, came back above it, all these hairy candles. So again, like when you see tails like this, those are signs of rejection. So anytime there's like a push back up, it's being sold off, push back up, it's being sold off, and it's failure to hold here, basically. But anyway, by this stage, you would have already been into the short, or you already flipped your position. So it's not a big deal there. But yeah, from here to here, pretty nice. From here to here, even if you just bought on the retest and then held to the flip, still 46%. Bought here on the retest, held to the flip, that's still 26%. So I mean, you can do that if you want. I just like to take profit personally and scale out. But yeah, in this case, if you got in straight away, here, for example, that's the candle close, and you could have done that, I guess, because there's the 50. So maybe if you did get in there and then took profit where this trend line was drawn after the fact. So took profit here at 3.43%, I suppose, this 3-line strike. Then yeah, after seeing some of this price action, probably would have been nice. So if you did get in on this candle and you did exit straight away, rather than waiting for some sort of little move back up, it's 15% down. So again, that's where you have to be studying your price action. This 21, very, very important. Anyway, I'll move on. So basically, where are we now? Here we are now, going down, down, down. So if you've been holding a short since up here, then wow, good on you. You did pretty well. You picked an absolute winner of a short, essentially, because if you look at the drawdown on this, that's 120% insane. And I guess if you just did the whole, that's a 52% move. I like to do the other way because I like to short. So that means for me, this is more meaningful because you're basically borrowing against your broker, selling on the market, and then buying back when you close the position. That's basically what a short is. So this is what I'm looking at right now. So here is a bunch of squiggly lines. Kind of obvious, I guess. I mean, they're kind of not so squiggly, more jagged. I guess these ones are more jagged. So basically what we're looking at here is this is a clear move back up. So you remember this hypermania phase, not really hypermania phase, but this was the bear market rally to pull back after this big capitulation tail. Look at this big wick, massive wick, basically bought back up. Doesn't look like that extreme on the 1 day, but on the 2 day, it looks like a really bullish candle. So that's this little relief rally, if you will, that happened in July and went for a good solid almost couple months, really, wasn't it? So here to here was 60 days. So yeah, 2 months. But as you can see here, the 21 period moving average, and if you saw this would have been great, a great place to either short, or I don't know if you've been along for some reason here. I would probably be looking at closing here. But the 21 period, as you can see, acted as resistance. We had the first rejection, and then 2 days later, the next rejection candle closed with a tail to the upside, and then the next rejection closed with a tail to the upside, right? So if you just held through this and you weren't looking at this, then well, this is what happened next. But again, look, we're still red, right? So maybe that was an opportunity to re-enter on your short if you were here. So maybe you took profit here, maybe you took some profit there. You were just like, I want to get back into this. Then you see the 21 rejections for 6 days in a row. And then even here, it like kind of tried to get back there as well. Then there's your re-entry signal basically. So then we went down, down, down. We had a Tom DeMark TDSS 9 here showing, which is basically counts to exhaustion of a trend. So it's like a reversal signal. And surely enough, 4 days later, we had this big move to back up to the upside and another rejection off the 21 SMMA on the 2-day chart. I mean, you just can't make this stuff up. This is 2 rejections and a bearish engulfing candle right there. See this little arrow here? This is the bearish engulfing candle signal. 3-line strike is way better, but again, this little triangle here is part of the TMA overlay indicator. See, we can see that it has the big ass candles, the 3-line strikes and the bearish engulfing candles. So that's what those are. And so now we have a trend line connecting from here to here. Now, what are we doing right now? Well, that's a good question. So we have this little channel, this cone, if you will, this converging cone. And basically we're coming into this point here. So this is basically where I'm looking to see if we're going to get some wild and erratic price action. I've got a few scenarios here. So what I've done here is I've drawn a little curve line to show an extension of this 21 SMMA, roughly what it'll look like. So to me, based on what I'm seeing here, we might come back up here. If we can break this 21 SMMA, because if you can see, we've just been rejected off it this whole time, right? So if we can break above it, right here, this little line here, which you can probably barely see because the bull market support band is over it, but there's a line there. That's the PSAR line. So if it touches there at all, then it'll flip to green. So to me, that would be, it touches this line, so it'd be down here, touches this line, flips to green, comes back, retests the 21, and then we're off to the races. And then for me, the next places I would think that we could go to would be the 50. So by the time the 50 comes down here, it's probably somewhere in the about 25K. And then the next one would be this big trend line here, which is coming down all the way from the top basically. And this is the logarithmic trend line. I know people have been showing the linear trend line and they're like, oh yeah, we've broken out. Big players aren't looking at linear charts. I mean, no one's looking at linear charts. Look at this nonsense. Linear charts look really bad. So when you're looking at long-term price action, logarithmic makes more sense. Not only that, but that's pretty much what the bigger players are looking at. They're not looking at this linear chart because it looks silly, especially when you zoom all the way out. I mean, here you can quite clearly see decent price action, decent price moves. Whereas if you could turn the linear chart on, what the hell is this? So log chart means more than the linear chart. So if you are watching videos and they're like, yeah, we've broken out. Look at that, Bitcoin's going to the moon. Guess what? People with a lot of money aren't caring about this. They don't care about that at all. That's like a retail line, if you will, which is a good sign of a fake out essentially. But if you do look at the linear chart, we've got a breakout and a retest. And if we can hold, then yeah, sure, maybe we go back up. But anyway, looking at the log chart, we're looking at about 29K, or by the time we might get there, probably closer to like 27K or thereabouts. And if we can get up to the 200 period, which is very doubtful, but if we can, that's sitting at around 31K at the moment, which would be really nice. That would be that Santa Claus rally, I guess. We'd require a lot of momentum to get back up there. So that's the bullish case that I'm looking at. And the bearish cases, and I say plural because there are a couple. Bearish case is that we basically failed to hold this line because we've been respecting it pretty well. It's been a nice little trading channel, buying the low and the selling the high, so on and so forth. But we also have this trend line here, basically, and then we have a bunch, there's 2 trend lines converging here. So there'd be quite a bit of resistance around this level here, around 25, or I should say 20,500. So I see that as a really strong resistance area, essentially. So that's why I've put this little I put this arrow here, essentially. We could go back up and kind of like fake out of this line here, touch the 21 again. I mean, that would just be ridiculous, 3 touches. That'd be the ultimate short, potentially, unless, and you put a pretty tight stop loss in, because if we got back out up, you know, we've also got the bear market resistance band to compete with as well. So you've got resistance there, you got a resistance there, you've got a resistance there. Like, there's just so much resistance, right? That's why it's a much easier path to move to basically go back down to, like, say 17K. That's what I've put here. So if we do have the momentum to push back up, then we also have the momentum to push back down, because there'll be a lot more liquidity. You got a lot of stop losses, a lot of liquidation levels and stuff like that with all of this kind of momentum. So it's the bigger they are, the harder they fall, right? And so, yes, if we can push all the way up here and get rejected, then I think it'd be a harder fall. I think if we just kind of struggle to do anything here, then I'm guessing we're just going to get a little break of this trend line here, and then maybe a retest to try and climb back up, and then a rejection down the bottom of the line. Do nothing too significant. That's just the bottom of this particular wedge here, which at the moment is sitting at around 18.2, which, to be honest, it's nothing that we haven't seen before. Recently, we were pretty much there. So it'd still be a higher low, which would give us the potential to move back up and sort of try and work our way back up to this trend line here, and then potentially move back up here. And then maybe that's where we could start to go back from. But yeah, I think that if we get rejected from up here again, then we're looking at probably a revisit back to the 17K level, which I feel like would be very aggressively bought up, because 17K, you see these levels are, there'd be a lot of buy orders here, big walls essentially. So you can see this line here, if you're wondering what this is basically, I've put steps on here on this chart of trend-based fib extension. So it's just basically where you pick the top, you pick the first leg down, and then the retracement. So that's how you basically get these. They're not respected perfectly. I mean, it definitely ran past this one. If we have a look here, that I've got them stepped on the chart. So quite a few lines down below, because that's just a lot of support down below, because that's all just basically a array line from this high, array line from this high, so on and so forth. So from here to here, up here and then down, you can see that's on this gray line here, which is also the 0.382 fib. So we went straight past it basically, and we came back and we got rejected again, and then we came back, we failed to hold it, and then it was rejected from there again. So pretty significant. This definitely worked there. Didn't hold perfectly. Didn't run straight, kind of. It did, like, as you can see, it did kind of bounce off of it, but there was just too much bearish energy, so we just fell straight through. And so basically what we have is the next step down, which if I move this around, we'll see where that is, down here. So that's this high to this low to this high. We haven't even touched it yet, and that's 17K. So it probably was front run a little bit. There's probably a lot of buy orders around here, around basically to get filled when this move happened. Maybe this was front run, or maybe they're looking at other levels of significance around here. So, you know, that's one thing to consider as well. So that's basically what I'm looking at. But this is also the swing trading strategy, right? So this is just the breakout retest. Unfortunately, didn't quite get there on this one. But again, look at the price action that happened before the flip and see if you see there was some sort of rejection off the 21, I would be definitely considering getting in immediately. Or at least, you know, if it closes, some sort of small attempt to get back up, I would be looking at the short potential there, essentially. So that's this swing trading strategy. This is what I'm looking at now to see if we can flip this back into green. I feel like we're going to get a really nice run back up, but as long as we're just below this line, it's just into the lower high, so it's still kind of bear market. Unless we can break out above this, test the 200, come back down, retest, and then come back out, well, that would be incredibly bullish. But I just don't see that happening just yet, because the macro factors, the US is still going a bit crazy on the interest rate hikes. Every month they'll be doing probably 75 basis points until they get inflation under control for a lengthened period of time. They want 2%, and they're like all the way up to like 8%. So that's going to take quite a bit of time to get under control. So sorry about that long-winded analysis there. The next thing I'm looking at least in the short term, is I'm looking at Bitcoin's CBD with perpetual futures contracts. So this is what I'm looking at in the short term. Well, some bear was just liquidated. So I'm looking at this aggregate chart. So it's charts.agri.trade. So this actually shows the CVD was a cumulative volume delta of BTC perps, right? So right now, if you look at this line, it shows that basically since, let's have a look here. I would say about the 7th of September, even though the price has been kind of going sideways, the bulls who are trading leverage and trading on perpetual swaps, perpetual futures contracts, they are very, very bullish, right? There's just a lot of people margin buying Bitcoin or buying Bitcoin on leverage. And if we have a look in a sec about the open interest, that's been climbing more and more and more, which means there's a lot more liquidity in the market, a lot more fuel to the fire. So we see that probably retail or just a lot of people are very bullish at the moment and trying to push price higher and higher. You've got a very small move to the upside, very, very small, but a very aggressive rise in the CVD on perpetual futures contracts. And this is aggregated across many exchanges. You can see this has got Binance data, it's got BitMEX data, Deribit, even TX data, and so on and so forth. They've got most of them. You can actually see all the sources here. Bybit, Coinbase, Deribit. This is also filtering trades by a certain trade size. So basically you can see all the big trades here, 240K, so on and so forth. And you can also see liquidations down here. We call it wrecked. But this is a very telling chart to me. And I've also got the cumulative liquidation delta turned on, which shows just a lot of bears have been liquidated. And one common thing that happens is you pick a good side, you pick the right side to be on, and then you get liquidated or stopped out, and then price basically goes back into your favor. Well, not anymore because you got stopped out or liquidated. So this is another thing I'm looking at as well. So, a lot of liquidity has already been grabbed. So there's these big fuel momentum ignition moves to the downside. Seems a bit more likely in the short term, to be perfectly honest, because I'm also looking at this open interest, right? So this open interest has climbed about $260 million, essentially $270 million, which means that in this period of time, there's just all of this liquidity to the downside, because you see, this has been going up, the open interest has been going up, and most of that is going long, because you see it's going up, which means that the cumulative volume delta is positive delta, which means long, essentially. So there's a very good chance in the short term we probably see some probably aggressive moves to the downside and just capturing liquidity and stopping out longs, so we can get this cumulative liquidation delta back to the upside, because that's kind of how these markets work. They kill all the shorts and then they kill all the longs. So there's a lot more longs to kill than shorts right now, basically is what this is telling me. And that's unfortunately how the market works. Hunts liquidity and magnetizes to it and just wrecks a lot of traders, unfortunately. It is what it is. Having a quick look at the Hyblock chart. So we can see that actually a lot of leverage is kind of being reduced, which I find is very interesting, because if we had a look at that chart before, it showed that open interest is on the rise, but it just means that people are using less leverage. This is just on OKX though. So actually it just says top traders. This is not OKX. The OKX is the whale and retail delta. You see the whales are more short than long, that's what that's telling me, which means that if you're a retail trader right now and you're long, then the whales are on the opposite side to you, essentially. And they have been since, around here, where you had the whales start to go long a bit more so on the 5th of October, but around 25 or 20.5K, 0.4 roughly, around thereabouts. And then we had this first move down here. And if you watched my previous video on this chart, as soon as you get a move back down from up, that's usually a good sign to either enter a short or close any long positions that you may have in. And subsequently, we got a 4% move to the downside. Just like here, we had this move up. As soon as we get that green candle, as soon as we get that first red candle, if you entered a short there, well, you would have been sitting pretty, the 10% win, essentially, on that one. This is bid-ask ratio. This is basically just showing you the bias on any given day between where most of the bids and asks are within 1% of price. Generally, this is better used on a lower time frame. I've got it on the daily right now, so it's not as helpful. could see it as potential liquidity hunts. Generally what this is used for though is to show that if you look at order flow and order books, you can see massive bid walls or offer walls essentially within 1% of price. And a lot of retail traders see these walls and they just basically will either close and try and front run those big positions essentially, or just a lot of traders in general. It doesn't have to be retail, will front run those walls essentially. So we're having a look here at the fear and greed index. We had a little bit of a spike to greed and then have come down since then. So that's this chart, wrapping that up. And no modern TA video would be complete without showing the Dixie, the DXY, the US dollar index. It bounced basically off its linear regression trend, and it's coming back up, unfortunately, to fill in these gaps, these fair value gaps. Essentially, we're back above the trend line. So this line in the middle is a sign of bull trend or bear trend. So below this line, bear trend, above the line is bull trend. So we're above here, kind of skirted around and didn't know what to do here. I'm very apprehensive with doing TA on the Dixie because it's just a sign of the US currency. It's not exactly something you can trade off of. So you see all these people drawing like trend lines and all sorts of stuff. And I've even got some here, so I'm just as bad, I guess. But you can see a lot of people drawing trend lines and stuff on the DXY. I don't really see it like that. I just see it as if it's going up, then it's a sign that risk assets are going to have a hard time going up. If it's going down, risk assets have a much easier time going up because you can watch plenty of videos out there on YouTube showing the correlation, the negative correlation between risk assets. Or it's a correlation, but it's the inverse correlation. So Dixie goes up, risk assets go down, Dixie goes down, risk assets go up. So anyway, so if you look at this linear regression line, basically we're still in an uptrend, have been for some time. This is basically an indicator that draws up linear regression based on previous price action. So, you can see it's connected this pricing here, come down here, so on and so forth. Perfect retouch here of the linear regression line. It just does it automatically for you. It's kind of nice. So we're still in an uptrending channel, basically. And what are we looking at? So if we have a look at these lines here, so I'm going to go to the weekly quickly. These lines here are from here to here, so we're going back pretty far, 2009, so this is GFC, I guess. Then 15 and 17, basically. So that's what this line up top is. And then this line here is this line that almost connects the top of the range of this parabolic move, crazy parabolic move. And I'm on the 8-hour chart, so I can see things with much finer resolution. I also have this down the bottom again. It's another TA indicator, doesn't mean a lot, but I mean, if you have a look here, unfortunately this didn't pick this up. Maybe if I went to the daily it would have. Didn't do it there either. 8-hour? Sort of. Anyway, what I'm alluding to right now is this low here and this low here. This low here, you can see on price action alone, this low is higher than this low. But on the RSI, this low is slightly lower than this one. That's what's called a hidden bullish divergence. Very, very strong move, which means that is a sign and signal of trend continuation. What's the trend? Up. So this was a very strong bounce, essentially. If you want to TA the DXY, which again, it seems silly to do, but here we are. And the top of the range here, I guess, at the moment, if you were to TA DXY, is looking at like 116 or thereabouts. So we come back up, do what we do with the DXY, and this 116. And getting up there, not going to be good for the S&P 500, and it's not going to be good for the stock market, and it might be bad for Bitcoin, I would say, but that's kind of what I'm looking at. The DXY is coming back up. It's above this line here, which again, this line is part of this linear regression indicator. So anyway, you can see actually we hit this top really well, and this is that really long-term trend line. We just basically hit it, bounce straight off of it. Maybe we form our lower high here, because we're in the median line of the linear regression. So maybe we just form a lower high, maybe we get rejected, come back down, and then kind of break out and start creating a new linear regression channel. We don't really know what's going to happen until it happens. But yeah, we could also come back up here and then get rejected, but we just don't know yet. Again, this is the DXY. This is not something you trade unless there's some sort of DXY mini futures contract or something like that exists. I don't really know. Like, you can get the 10-year yield curve mini futures, so people can actually trade futures contracts on the 10-year yield, which quite clearly, as you can see here, is in a very aggressive uptrend. With that, I mean, this would be pretty safe bet if you were trading this, basically. But yeah, this is the futures contract for the 10-year yield curve. Really nice bounce at the lower linear regression line, and it's coming back up. It's coming back to the median line. Small sell off there. The orange indicates a not so strong sell. But yeah, when we have darker colors, those are usually signs of stronger candles. It's basically the volume down. So anyway, that's your 10-year yield. Still in an uptrend. Could reject here at the median line, but not so sure. At this stage, we'll see what happens. Big fair value gap right there. So it might come and refill that. It's already like halfway through it, so it might just come back, refill it, hit this linear regression line, and then come back down again. If it did come back down again, I think that wouldn't be good for it. And we've got all this liquidity to the downside. Look at all this. The green horizontal lines are a sign of their fair value gaps. They're basically where there's a high potential for a lot of liquidity, because it's basically putting them on strong moves. Basically, it's measuring the volume. So wherever there's a strong move, it's probably just a lot of orders still sitting there. That's what fair value is designed for. But anyway, I don't really trade those. Just wanted to show that. And so yeah, stock market coming back down. Maybe forms a lower low, not really sure. Maybe it forms a higher low here, and then goes on to do a Christmas rally, essentially. Let's have a look here. There we go. So this is the stock market on the daily chart with these lines here. So next low, potentially we could be coming back down here to this regression line here, this linear regression line here, which is looking at the moment, about 33.60. And then we might just get a bounce off there. So, you know, we might sort of look at something like this where we break this low, come back above and do something like this. Or yeah, just something like this up to this line here, probably more so, which at the moment is looking at around, you know, a recovery back up to 3,800 level. But yeah, we're clearly in a downtrend. Like, there's no two ways about it. We have been since December last year, essentially. So that is that. One quick thing I wanted to show before I wrap this video up, which has probably gone on long enough, but here I am making long videos again. Ugh, I got to get out of the habit of this. So we have this. This is the Bitcoin divided by the S&P 500. And at the moment, I'm kind of looking at this chart as the correlation index, almost, so to speak. Because if we are starting to get green candles against the S&P 500, then that shows that we are slightly decorrelating. We had a bullish divergence on the RSI. So here we go, higher low. And we've got this big trend line here. Again, this is a linear trend line, so you make of this what you will. But unfortunately, if I turn logarithmic chart on, it does this, so a bit of a mess. You can see that even still after, let's put the monthly on. Nah, I'm just going to leave it as is. So if we have a look back last year, if we look at this chart, when you divide Bitcoin by the S&P 500, we had a lower high. So this big second top that was a higher high for Bitcoin, well, if you divide by S&P 500, actually it was a lower high. So that's kind of interesting. So that wasn't really a higher high against the S&P 500. So I just think that's interesting. Make of that what you will, but I just kind of think that would be a good sign that that was just a lower high across the board rather than a fake higher high, which is what we got basically, to create like an expanded flat correction, if you will. But yeah, let's have a look here. We've got green candles against the S&P 500 on the weekly chart. So we're actually entering above, and we're moving above this trend line, or this trend moving average, if you will. Again, above is bull market or bullish trend, below is bearish trend. So we're actually getting above. So we're getting bullish. Well, Bitcoin's just been going sideways, but the S&P 500 has been going down. So that's why we're getting strength against the S&P 500, which to me is possible decorrelation, which is kind of why I'm saying I'm using this as a correlation between stock market and Bitcoin. So yeah, we can see we're getting green candles and we're basically breaking out of this trend line, this long-term trend line against the S&P 500. So I mean, that's kind of interesting. Can't really trade this. There's any exchanges that do Bitcoin against I really don't think there is. Bitcoin against the S&P 500. But this, again, I'm just saying, this is showing that Bitcoin is showing much more strength than the stock market is. And what am I doing right now? Well, it's a good question. So right now I'm in a few trades actually. I'm in a long on Sol. I'm also in that short on Ethereum that I have been in quite some time. And I'm in a short on Sol as well. So I have multiple accounts following multiple strategies. So here is one of my shorts here. So I entered the short here on this BB buy and sell. So I had a long here, again, closed it on fib retracement lines, stuff like that. Had a tiny bit left on the table, flipped it to short here. So I've closed off a decent amount of the short along the way, especially this trend line and this Fibonacci, which like touched kind of perfectly because I front run these. And so I'm just waiting for this to change to long because it's get very close to the average true range here, so could get a long here. I'm still in this ETH short, which I opened over here and added to up here. So right now that's up like 27%. I've just got 20% left on the table that I'm just kind of riding. Although this flip on the stochastic, you know, might have been a good time to get back in, but I haven't re-entered on this. I'm just leaving this go and do its thing. So I'm just leaving that as is. Finally, I've got a short here. So I entered on this particular strategy. I haven't actually made a video for yet. So anyway, I'll make a video on this shortly. But this is basically, you wait for these EMAs. This is the market cipher indicator. You can get this for free, the A and the B. I've done videos on this in the past, but this strategy basically is you wait for the EMAs to flip to blue to long or gray to short, and then you wait for the retest of the 21, or you build a position with the 21 and the 50. So didn't work here, wasn't great. It went red here. I was waiting for that retest, never happened. If I got in straight away, it would have been good, but I don't really like to do that. And it didn't work here as well, but I was able to change my position to long at break even, so it wasn't a big deal, essentially. I don't know why I haven't put my long trade in there, but anyway. So the way this strategy works is you basically wait for the EMAs to go blue on the market cipher, and then you build a position from the 21 and the 50. So I had this move here. I took a lot of the profit over here, essentially around like here. I was just probably kind of selling off as it went up. And then with my long position, I flipped that to short today in profit because I closed off a decent amount of my position. So yeah, at the 100 and at the red dot up here, because there was a bearish divergence. Have a look at these lines here, stochastic and RSI divergences, and a red dot. So I closed a big chunk of the position here and then just waited, and then I opened the position here. So currently I'm up on that short, especially since on the market cipher wave trend, we can see we've come back above the line. So that gives me more confidence that there's a lot more juice for a downside move, essentially. So that short, I'm just waiting to play out. If it goes back up and then comes back down and these lines flip back to blue, well, then I'll just close and flip the trade, essentially. And maybe I will incur a small loss, but with this strategy, I've got a script automatically set up to take profit at 2% profit, 4% profit, 8% profit, and 15% profit. I think I might get a little bit less greedy with that last one, but that's fifths. It's taking a fifth of the trade out every time, and the script just does that automatically. So, and then sometimes I move those around to significant levels, but with this strategy, I'm just using a bot for taking profit. I did have as 4, 6, 8, 10, and 15, but I've kind of lowered that a bit. So that's that trade. And the next one I have, which is the 1 minute chart. Look at this degen over here. Using this 1 minute chart on Sol, and I should probably tend to that. My entry was here on the 200 period, although that was probably, my entry was around here. The reason why I've done this, I've entered this long, is because on the 15-minute market cipher chart, we have the blue EMAs. So this strategy works on the 15-minute for me, I feel, and the 4-hour. So, because here, like, it went red, retest, went down. That was a nice short. I only really get, like, I have my take profits at like 0.5%, 1%, and 1.5%. So these are very short-term trades essentially. And with these EMAs, came back down to the 200 essentially. That's where I put my buy, my first buy, and my next buy is at the 21. So I'm scaling into a position here. So, you know, there's about 0.3% difference between that. So what's the big deal? Although to me, this doesn't look good. A breakout above the 200, a retest, and a failure to hold. That's where this 21 will be really, really important. So this is the moment of truth. One thing that I do not like the look at of is this 3-point dip chain. We have, look at these like messy lines. We have a dot, and a dot, and then the wave trend is coming down. We have lower, high, lower, but then we have higher price action. So this 3-point dip chain, which I usually only trade on the 5-minute, don't really trade them as much these days, but to me, when I see that, that's a pretty big red flag, in all honesty. But I'm in this long, I'm in 2 shorts, 3 shorts, if you include the Ethereum trade. So I would say net, I am short over long, but my long is to hedge just in case my analysis is incorrect. As you can see with all these charts, it's just like, oh, what do I follow? Well, yeah, I've got several strategies and several accounts, and then I measure the performance of all of those accounts. So that's why it's good having sub accounts and maybe some accounts on exchanges, kind of starting at similar amounts of capital and then just using that strategy for months until you can look and do like a 6-monthly review and look at your accounts and see, hey, which is the best strategy? It's kind of how I work. So yep, I got in on this and I've been looking at the 1-minute chart, very degen. Although to me this flips now red, and red trend line down, trend bar down here, so I actually don't really like this anymore, but it is what it is. I'm in it and I'm doing a video now, so I'm just going to let this play out. In the short term, very, very short term, it's looking a little bearish. These trend lines still are blue, but if this flips here to gray, well, I'm going to be looking at the first opportunity to get the hell out of this trade. So yeah, anyway, that is it. So that's the video. If you got some value out of this, please hit the like button, subscribe to the channel, bell notification, check out some of my other videos, so on and so forth. You know, all that stuff that YouTubers have to say, basically. And yeah, I've shown the Bitcoin 2-day chart swing trading strategy, very good one, especially for longer term swing trading and working out what kind of trend we're in, and went through quite a few charts. To me, things are looking a bit more bearish than bullish. It's a lot of liquidity to the downside. We saw from that CVD for perpetuals that with all this big buildup of open interest, the majority of that has been bullish. More liquidity to the downside. So more stop losses, liquidations, all that sort of stuff. Big players who need to get orders filled or that tear through liquidity in order to create large price moves, so make a lot of money. They'll be hunting the downside most likely. Personally, as you saw from my trades, I do have mostly shorts open, but I am hedged. I have a long as well, which I'll pull the pin on if things start to look a bit dicey. But that is it. Thanks for watching. Have a good one. Peace out. See you later.